Welcome. This is Bert Dohmen with another episode of Chart Guru. This is August 7th, and today I want to talk to you about a terrific indicator that we have been following for many years, and it's very simple how it works, and it's very good in giving you long-term signals. It's not geared to short-term trading signals, but the longer-term trend of the markets is really reflected in this indicator. It's the cumulative 4-week new high, new low indicator. What it actually does, it takes the number of stocks that are making a new 12 months high, the highest in 12 months, and subtracts the number of stocks making a new 12 months low. And that tells you really the trend of the majority of stocks. So instead of following a major index, which is highly manipulated because a few stocks are high capitalization stocks and they move the entire index, you look at this and you see what the majority of stocks are doing. You see what the insiders are doing. You see what the big smart money is doing, not what they tell you on financial TV. Okay, now the thin green line here is the S&P 500. Okay, this is an index that has 500 stocks, but about 40 stocks control the entire movement of the index because they're the highest weighted capitalization wide. Okay, so by just moving up 40 stocks, they can make this stock market index stay up for a long time while the rest of the stocks are being sold. This here is the cumulative 4-week new high, new low indicator. And below that, we use a special MACD with special periods that tells you the major trend. So it takes out some of these big jig-jags in the index, makes it a lot smoother, and when it crosses over, as it did right here in early May, you know it's time to sell your stocks. And look at how the stocks have been going down since that time. It's a great index, and it's something that Wall Street doesn't want you to know about, but we do a lot of things that Wall Street doesn't want you to know about because we want to make money in the markets. And now we're in a down market. This is the greatest time in the stock market. Stocks go down much faster than they go up. And if you're on the other side of the majority, you can make money. If the majority is saying you buy, especially in a down market, I was telling you to buy, and you are selling short, or you're buying the inverse ETFs, you can make a lot of money on the way down. And that's what we did in 2008 when we gave a sell signal and we bought the inverse ETFs, which are geared to rise in price as the sector or the index declines. You can make a lot of money. In 6 weeks' time in 2008, during the crash, when everybody was bleeding, those 5 recommendations that we made in 6 weeks were up an average of 72%. That was one of them was up 93% in 6 weeks' time. That's what you can do when you are properly prepared for a down market. And that's what we aim to do for our valued subscribers. So come visit us at domencapital.com and get on board. Great times are ahead as markets plummet. Thank you very much. See you next.